These numbers that are flashing for you on the screen, it's coming at around 2,430 approximately. So that number really is the only number that we have at this point of time. The stock, though, hasn't taken it very well. It's moved lower in the last few minutes. So just pull up that number again for you, 2,400 approximately. That compares with our poll of around 2,550. So that's a bit of a miss. It's close to around 120 crores miss on the top line. That's a rather significant figure. So the street is really only reacting to that number currently. We're waiting for more numbers.
Well, I've got the top line growth. It's 8904. So that's also missed our expectations by a considerable amount. So it's lower than our expectations by nearly 500 crores. So right now, both the top line as well as the bottom line is looking weaker than consensus expectation. The top line, in fact, this time would actually be a degrowth. Still trying to calculate what the margins are, but let's run you through the numbers. Revenues have contracted marginally, 8,904. This compares with 9,024, and the bottom line is coming at 2,431, absolutely flat on a year-on-year basis, and both the revenues as well as profits have missed consensus expectations. The stock is reacted negatively, but it's only down close to about 2.5%. Agam as well is here. Okay, before that, let's go across to Suruchi Jain, the equity research analyst at Morningstar. Hi, Suruchi, your initial reaction?
I think the numbers are definitely looking disappointing, both on top line and bottom line front. What we were hoping for this year is actually an 8% growth in net income and modest double-digit growth in top line, and mainly on the back of price increases that the company should be able to pass on despite, volume degrowth. But these numbers definitely look disappointing.
Let's get in Agam as well. Agam, did you manage to calculate the margins?
Not yet, but I am looking at the cigarette revenues.
I think I've got the margins. Actually, it should be at around 3,560 approximately. So that margin, in fact, is coming in at around 40%. That's mildly better than what we had estimated at around 39%. So the margins are looking good, though on the absolute basis, I think it'll be a tad bit lower because there's such a big miss on the top line itself. Sriji, what's your take in terms of margins? 40%, I mean, that's a big miss on the top line, but margins impressive or a tad bit better?
Yes, definitely. Margins are better than what we were expecting. And, I think what we've continually said for ITC is what they lose in volumes, they'll make up in margins. And so it seems like that's what they continue to do. We only wish that it would also show up, on the net income line, because typically the stock moves with earnings, and until it shows up in the bottom line and in EPS numbers, the stock is, trading far below our fair value of 406, which has been at 406 for a long time now, because the triggers are just not panning out.
So, Suruchi, I'm looking at the cigarette revenues, which have moved up as much as 2% on a year-on-year basis. And again, its margins are coming at around 69%. But we have a number on the cigarette revenues at around 4,300 crores. Do you think that's up to mark? Because we were expecting a hike in MRP of anywhere between 17 to 18%. But on the other hand, we were also expecting a significant decline in volumes. What do you make of these numbers for now?
So 43 is, broadly in line. They did 42.5 last year, same quarter. So it's really not much of a move. What is encouraging, though, I mean, despite the number not moving too much, is that, they've done this despite, my sense is, volume degrowth. So that means that, the narrow economic moat that we give ITC, that, people will not stop smoking their cigarettes because of brands, because of habit formation, continues to hold.
So just one more detail. It's the agri business which is clearly disappointed on the top line. Agri revenues have come down by over 10% on a year-on-year basis, 1,843 versus 2,058. So the big miss has actually come in at the agri business, where the revenues have declined by nearly 10%. Even the cigarette revenues is not much to drive home about. A 1.5% growth in their revenues, 3% increase at the EBIT level. But I think the big fall, Agam, has come in at the agri level.
Yes, it has. And, the agri segment is important because a good 20% to 20% of your revenues come from there. And we are clearly looking at a miss out there. And and that's perhaps the reason why we're looking at a little bit of a miss. But the other segment that I wanted to cover was the FMCG segment, because we are looking at a 7% increase there as against an expectation of around 10 to 11%. So Suruchi, I'm coming back to you and asking you, do you think that the revenue figure of about 2,350 crores from the FMCG other segment is good enough for you?
No, I think we would have definitely liked it to be a little higher. Given that the company spent a lot of money in terms of growing that business. So at least, top line should show more healthy, even though we understand that profits might take some time to pan out. So I think, 23.5 is all right, but it could have been better.
All right, I think we have another reaction with us as well. Naveen Kulkarni, I believe, joins us currently. Naveen, you've had a look at the numbers on the top lines, missed our poll comfortably. In fact, margins more or less stable, profitability as well as taken a hit. What's your take? What's your initial reaction?
Yeah. Revenues, of course, are lower. See, ITC numbers are pretty much driven by cigarettes business, and cigarette revenues are just around 1.5% after taking price hikes in the range of around 20-25%. So from that perspective, I believe the volume degrowth has been quite severe in the quarter. So that is what is the primary reason why the numbers are not looking that encouraging. Secondly, even after taking so much price hikes, the cigarette EBIT growth is in the range of around 3%. So that's also not very encouraging. So I would say the numbers on overall perspective, considering this is one of those quarters where we have had significant gross margin expansion across our other categories. So the numbers are not very encouraging.
Naveen, would you change your estimates on ITC post what they've delivered? I think this would be the 10th consecutive quarter when the cigarette volumes would have degrown. So would you change your estimates, and your thoughts on the stock after the 3% decline? Almost 4% now.
Yeah, so we may not change our estimates much because we already have a sell recommendation on the stock and our estimates are significantly lower than consensus. So our estimates may not get changed too much, maybe 1 or 2% here and there, but not looking at a significant downgrade in terms of estimates.
Now, actually, Naveen, I'd also like your take on the FMCG other business, where we've seen about a 7% increase in revenues there. And at the agri business, on the other hand, which has shown a decline of as much as 10% on a year-on-year basis. Though in the agri business, we have seen an improvement in EBIT. What is your call on these two segments, given a good 40% of the revenues come from these two segments together?
See, what happens is that when the cigarette revenues are under pressure, the agri business also gets impacted. Reason being, the agri business is not a very great profitable business. So when cigarette volumes are down, the distribution for the FMCG other business is also impacted. So that could be one of the reasons why we are not seeing inspiring growth in that category. Apart from that, overall, if I were to look at the FMCG others business, it's dominated by atta, biscuits, and some of the other, and personal care. So some of these categories are in deflation. So that also would have impacted the revenue growth. In terms of the agri business, the absolute revenues are not very important. Important number is the EBIT number, and I think that if it is grown reasonably well, I think we are in okay zone there.
Okay, but Naveen, staying with the agri point, while the EBIT number may be more important, the agri revenues still contribute about 20% to the overall number, and it's been declining. Even in the previous quarter, the agri business was down over 20-30%, and this quarter it's lost another 10%. Is the street overestimating the agri revenues, considering the last 2 quarters' performance?
Yeah, see, the agri revenues, the revenue estimate is not very critical because it is dependent a lot on the what commodities that they tend to trade. So the mix of commodities might also change. It could be tobacco, it could be soya, it could be some of the others. So that's a number which is very difficult to predict. So it's primarily a trading business, and eventually what matters is at what price you buy and what price you sell. So the spread matters. So that's why I'm saying the EBIT number is much more important than the revenue number. Revenue number can be very low, but the profit number is growing, then we are still doing well in that category.
All right, by the way, ITC has spoiled the entire party for the Nifty. The Nifty has come off the high point. Now we are trading in the red. But Naveen, coming back to you then, do you believe that I think you would be tweaking your estimates for this year itself? What's your current outlook on the stock? What's your target price? And do you believe there's going to be a big switch?
See, our target price is 270, and we are valuing the stock at 20 times FY17 because of the stress that we are seeing in the system. May not be tweaking our estimates too much because we already have a much lower number than the consensus estimates, and we believe that the stock will continue to remain under pressure for a while after. See, again, there has been VAT rate hike in Maharashtra. So all these factors are going to continue to impact the operating performance of the company for a while now.
Naveen, there is a certain consensus which is building that the decline in cigarette volumes will eventually moderate over the next couple of quarters. Are you of the same opinion? Do you think that that decline can moderate, and in that case, can this give an advantage to ITC going forward?
That's a base effect, right? The next quarter, Q3 and Q4, it's primarily because of the lower base. So last year Q3, where we saw around a decline of around 15% in terms of cigarette volumes. So the base becomes a little more favorable, and on that base, if the company is able to deliver, let's say, growth of around 1% or even a decline of around 1 to 2%, so that might mean moderation from the current 14-15% numbers that we are seeing. However, the absolute EBIT growth and the absolute EPS, right, that may not still be an inspiring number. So that is where the concerns will continue to persist.
Okay. Right now, the stock is only slipping. It's down 4.5%, 334. Let's get a final word from Suruchi. Is it likely that you will change any of your estimates on ITC and your view on the stock after the fall, near 5% fall?
So I think we've held a long-term belief that, it does have sustainable competitive advantages as far as the business is concerned, but the stock price has definitely underperformed and on the back of earnings. And we've had a 406 rupee fair value on it for a very long time. Given that the earnings have been much weaker than what we were expecting, we will definitely